Alright, what is up? Today's Tuesday, March 17th, 2026. This is the trade recap for today. I ended up taking one trade, and that trade was a break even. And we'll go straight to the trade recap. Also, yesterday I took a trade, break even longs. So this week has so far been testing my patience, but with FOMC tomorrow, price action has been a little choppier, and that has been expected. So nothing we can really much do about that except trade smarter. But let's get straight to the trade recap. Going into market open today. I'm just going on the 4 hour for everything. Market open for today. There were clear draws on liquidity, which were previously highs on NQ and previously highs and relatively equal highs on ES. Right. So yesterday, if you guys remember, we took out this high up here and tapped into the daily gap on NQ, but not on ES, and that's when we formed the S&T. But going to today's market open, I was strongly bullish because the structure for the overnight session, so Asia and London, tapped into the hourly gap, got an extension outwards, right? And now going into market open, so like 9:20ish, 9:30ish, price is already here, and we clearly had very strong draws on liquidity, which I said previously highs over here. And to make either cherry on top, this is a high resistance draw on liquidity because it's in this hourly gap. You can see here on Friday we tapped into it, set a high, and yesterday as well. So it's a high resistance draw on liquidity, so we can expect a reaction off of this for a reversal trade or a reaction into a fair value gap and then a continuation trade to higher draw on liquidity. Anyways, 1 hour, not much I was looking for except seeing if I could possibly take a trade to the previous highs, and if not, see if we can catch a trade off the reaction of this previous high. So I really want to see how we backed off this 1 hour gap after we take out the high. But let's go to the lower time frame because that's pretty much where a lot of my thought process was or came from. On the 15-minute, we clearly saw that we had a lot of 15-minute gaps. So going into market open, my main idea was okay to catch a trade from price action tapping into a 15-minute gap, or into in my opinion, I didn't expect it to go to equilibrium because on this entire leg up, we did not take out any high resistance on liquidity, so there is no need exactly for us to tap into equilibrium for the new buyer. So I was looking for a tap into a 15-minute gap, 5-minute gap, which we had right away into market open, and I was looking for a trade up to either 50 highs or just to get a 1-to-1 because the price, the RR was pretty terrible for that trade. So that's what I was thinking right off the bat. Yeah, so ES ended up taking out previously highs and the stacked high, relative equal high, before NQ did and pre-market. So I didn't expect a bearish S&T, but I did expect price to go to those draws on liquidity, and that's exactly what we did. Market opened, NQ tapped into 15-minute gap, and then I could have taken this 1-minute trade. So I'm in IFEG, ended up, staying out of it and fading it. I just didn't like the RR, and obviously I could have just went for a 1-to-1, but I was not feeling it, and I want to stay more disciplined because I don't like trading super close to market open, especially since that's where a lot of my mistakes do stem from. So then I had to be patient. So we took out that previously high, and I knew, okay, this is a high resistance on liquidity. We can get a reaction from it, or if we don't get a reaction from it, and we inverse the hourly gap that the drawn liquidity was inside of, then we're pretty confident that we're going to maintain a bullish bias throughout the day. That's exactly what we did. Market opened, we took out the highs, and then pretty much just chopped around. At this point, I was looking for a retracing play, right? Hoping we tap into this 5-minute gap and retrace higher to get a 1-to-1, or take out these hourly highs over here. But unfortunately, we created all these untapped gaps, but did not get a retrace into them, so that was unfortunate. And then we ended up moving higher and higher towards these 4-hour gaps, the 4-hour drawn liquidity, where we finally got legs down. And at this point, we had a 15-minute open up. So my main thought process was, okay, let's now tap into. So my main thought process was, okay, since we inversed this hourly gap and did not show a strong reaction from taking out previously highs, we are now fully bullish and have solidified my bullish bias. Now I'm looking for us to tap into the 15-minute gap, and from there get the highest inverse up to then target session highs or even the 4-hour highs, right? So whichever one I preferred, then I saw fit for that trade. So at this point, what I was also looking for was ES taking out the New York open low, right? That's also a draw on liquidity I was looking at and see if I can get a reversal trade at around 934, 935 because I was looking for the reaction off of the previously high manipulation, but we didn't get it, so then I invalidated that trade. But now, as price started forming after 10 o'clock, it seems more and more apparent that on one of the indexes we were gonna get a manipulation of the New York Open low, and so I was hoping for the bullish S&T to get created, which we did, which was absolutely perfect. So then from there, after getting that bullish S&T, ES taken out the New York Open low and NQ not, I was looking for the highest time frame inverse. And keep in mind, we also had this 15-minute gap that we hardly inversed, but that is expected because for price to go lower on ES, it also will reciprocally go lower on NQ. So it didn't bother me too much of inverse the 15-minute. I was pretty confident that from here, if we get a strong reaction from the bullish S&T, that we can get good displacement towards the drawn liquidity, which are what we call session highs and these 4-hour highs. So the best way to go about this trade was obviously we formed a 5-minute IFEG, and before that we also formed a couple of stacked 3 minutes. Now I could have played it really safe and gone for and waited for the 3-minute and 5-minute IFEGs. However, what I did was I stayed patient and I stayed attentive, and what I saw was an immediate reaction from these bullish S&T, and I saw that we had huge displacement candles, and I didn't enter off FOMO, but I entered off of almost a prediction that we're going to inverse this, and this is riskier, but I had such strong confirmation and such strong conviction that this trade was going to play out that I entered off the 1-minute displacement candle, and that was my entry over here. My break-even point initially was at these highs over here. That was my initial break-even point, and then my stop loss over here at the low. And right, so with this trade, our stop loss placement is good because where our stop loss is at a point in price that is high resistance. So on ES we took out the New York Open low. On NQ we didn't. This is a bullish S&T. This is a high resistance low, so we don't want to see this low get revisited, and this would be the point of invalidation for our trade unless we take out draws of liquidity like session highs or 4-hour highs. That's when we can be like, okay, it's plausible and reasonable for price to revisit these lows. So price ended up chopping around. Right, we can't catch a break these past 2 days, but it is what it is. Price ended up chopping around, and then after we had this tap back into this 1-minute gap, or not, this 1-minute gap, which is also a 3-minute gap over here, and we formed these 1-minute highs. I set my break even to these highs, right? And at this point in time, after we took out these highs, I put my stop loss to break even, and I had such strong conviction that we're gonna go and take out the highs over here and get this trade, this dub, and literally pass the account because the trade went past the account, but we didn't care too much about that. But as soon as we went break even, price reversed, hit our break even, and we got the trade, and price just continued to chop around. And yeah, we know that when chop is present within price action, a lot of the trades tend to be less probable, and so that's exactly what happened. We had a lot of chop, and yeah, I could have taken a 1-to-1 at the very least, but I thought that price had very good reason to revisit these session highs. And that's pretty much the thought process going into the trade. I'm not too upset. I had 2 break evens back to back, but that is trading sometimes, FOMC is coming up, price action is going to be choppier, and we're going to have probably a larger displacement or larger move in the markets tomorrow in the PM session. So we're going to look for that and just, trade accordingly, reactive traders. Not much else. And I couldn't see how we could have possibly gone short, but that's just my thought process, and that concludes the trade recap for today. I'm really happy with my psychology this week. I'm really staying objective, and we're caring less and less about the outcome, more about the process, and being more patient. So that's pretty much the trade recap for today. I'll catch you guys tomorrow.